Hey, before we start, I just want to remind everybody that all the materials we do present are for trading purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or nor a promise of future performance. So let's go. Just waiting to see. Okay. Got a bunch of people showing up. There we go. Hey, Jim, how you doing? Excellent. So, folks, have you ever been swamped by that super tricky trading strategies? It reminds me of a good friend of mine who basically was taken basically, I won't say advantage of, but there was this real great stock guru who put out an idea called high probability trading. And what they were they were iron condors on the indexes and all this type of thing. And they were getting like 15 or 20 cents on both sides of the wings of the condor. But if it turned against you, you were looking at getting the snot slapped out of you. And that's exactly what happened to my buddy. Is basically he gets the snot slapped out of him and lost six figures. Now the complication of it was if the trade went against you, you had to basically double down and double down and double down. And what a crummy way to basically try to work through it. So today we're going to flip the script and let's flip it upside down. Is it really all about making things complicated, or is there a secret power in keeping things simple? I think there's a secret power in keeping things simple, and that's what we're going to work on today. So welcome to Trade Your Way to Freedom. I don't know if Anil's joining us. I don't think Anil's joining us today. I have not heard from him, so I hope everything's going okay for him over in India. But we are jam-packed with all kinds of great stuff to figure out what this guy's doing, because complicated systems can sometimes be just too much. So are you in for making a straightforward and boosting your success? Well, if you are, then let's get started. And before I do that, hey, just let me know where you're watching at over on the YouTube channel. Drop a note down in the into the chat box. I'd really appreciate it, so I know where you're coming from. So this week I got a couple of things that are just driving the market nuts. Thanks a lot. Oh, wow. Hey, Solomon, how you doing? Delaware, Rafe, great. Hey, Paul. Joyzy, huh? Is that like New Jersey? All right. Hey, Tim. Kurt, good to see you guys. Hey, Charlie. SoCal. Okay. Anyway, news for this week. Well, one, the Dow's fall. It fell a little bit this morning ahead of the inflation survey, but the chip giant AMD is setting record highs. So between AMD and NVDA, it's basically going crazy out there, and which is okay, And so AMD's making money. However, there's some things that are just kind of going, eh. And as we've seen here, Dow futures fall, NASDAQ hits record high, AI chip maker giant breaks out, and Dell soars. We're going to jump into taking a look at each one of these issues as we go forward. So, what does all of this mean to your trading, your game plan, and your trading plan? And we're going to break it down as we move forward. So let's jump over into, if you ever felt like you're over your head with trading strategies that seem more like a puzzle that you can't solve, how does that confusion affect your confidence in the decision in the market. And, do you ever feel confused? Just put a yes or no. Yes, yeah, I feel confused. I feel too complex. And we're going to have some suggestions today, so you want to watch all the way to the end about how you can resolve that. And so feel free to drop a note down in the chat box about anything that you get a hang up with the complexity. So today we're going to zoom in on the spiders, the Russell and the NASDAQ. Let's jump over into the. There we go. Oops. Let's jump over into the spiders. It's so funny. I drew this line up here. This line up here at 514 on the S&P, or the spiders, is a Fibonacci extension. And if you didn't know, you can use your Fibonacci extensions to generate levels of potential resistance before the prices get there. In other words, what this is doing for us is it basically is giving us an idea where things may reverse and roll over. And I can't remember if this is a 1272 or the 1618. However, that is a strong level of past support. So when prices broke above the past high and kept pushing up, then the projection or the extension of the Fibonacci gives you an idea of where other traders will be watching the price action, and that may be where they say, okay, we're taking our profits here, and that would start a selling climax. Right now, this market isn't showing us that it's ready to, do the climax thing yet. What else are we looking at? Well, the thing that really catches my attention is we've gone up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 out of 18 weeks in a row. That doesn't happen often. If I draw a line, and I'm going to spend just a real quick time here, I'm going to draw one line, and I'm going to do the old, basically I'm going to use the time extensions on the Fibonacci, and I'm going to go from, where am I going to go? I'm going to go from here to here. That was the last really big rally. Draw back down to here. And that gives us an idea of, oh my goodness gracious, on 3.7, that is the symmetric move to the upside. If you've never seen that done before, these time extensions in the Fibonacci's work really, really well. It's really excellent. So what does this do for you? All it does is give us an idea that we can keep in our back pocket that around the 7th of that's the week of the 7th, which is, it's next week. Because on the daily chart, it shows that peak will be hit on 3.9. So do I design a trade prior to that, getting there? Heavens no, I don't touch that at all. But that does give us an idea of, that's maybe, if the market repeats itself, where the market will start slowing down. We can do something similar to that on the NASDAQ. So what's our concept here? Is basically, I can't do a darn thing with this until we get some kind of a reversal signal. This was a nice little 4-day flag back, and now we're taking off and rallying. This market reminds me a lot of the market in 2004. Where it would basically just run up for 7 days, pull back for 3 days, run up for 7 days, pull back for 3 days, and it repeated that for almost the full year of 2004. And it was really a challenge to, one, get into a position, but then secondly, a lot of traders were anticipating the top, and so I was one of them. We would put in the downside trades only to get our faces ripped off when it continued to roll to the upside. IWM, we've been waiting for this one. Break out above this Fibonacci extension. Let's see if we go on up and hit this 212 level. The 212 is the long-term past high. And so it's nice to see that the small caps are also participating. One of the things that's really interesting that you may think about is that the Fed now is pushing back on doing any rate decreases. And we'll cover why here shortly, but that's one of the big pushback the Fed's having. So I'm going to go ahead and remove that line there. And so on the Russell, look for a pullback into the moving averages. And that's what I'm going to wait for. And we can use the Fibonacci's to find out where approximately that would be also by just laying the fib on. Give you a real quick idea of that. This last pullback, if we do a similar symmetric pullback, now I'm not sure if this is going to be the high. If it's not the high, I'll have to recalibrate. But that gives us a pullback down to 201, which puts us, or 202, which is at the 8-day, and a 78% retracement would put us at 199, and a full 100% would actually put us back into the breakout area from that hammer candlestick right there. What about the Qs? The Qs are just acting like a beast. I mean, they are. I left on the Fibonacci over here to give you an idea of what the next potential target is. And as it drives back up to the upside, let me ask you a question. I want to do one thing here. There we go. Okay, cool. I don't know if that was there a little thing at the bottom of the screen saying that's where the comments are going to show up. I'm still getting used to using the live stream or the StreamYard. Yes, there was, Jake. Okay. Well, it's gone now. Okay, excellent. Thank you. The NASDAQ just really, really ripping out, and moving higher. One of the things I'll be watching, okay, we talk about the clusters on the market forecast at the bottom. Well, they appear at the top also. However, when they appear at the top, like we have right here on the daily chart, and also on the weekly chart, we've got a 3-line cluster at the top. That gives us an idea that, okay, we may get some kind of a pullback. If we did a similar type of extension that we did on the S&P, we're looking like we're projecting out. We'll probably hit first part of March, mid part of March, a inflection point where things may pull back. But how much? Right now, the Qs, especially the NASDAQ, is exceptionally strong. So what are we looking at? Look for a pullback into the 820-day moving average and or this uptrend line. Strong moves to the upside with the NASDAQ. So, okay, let's see. There we go. So of the 3 indexes, which one are you looking most? Which one do you want to trade the most? Just lay a comment in the comment section. Are you looking at the S&P? You're looking at the NASDAQ? Or are you looking at the Russell right now? I'll wait for you to do your comments, and I'll jump over into the Qs. Okay. Yeah, I think both of those got some TNA. Yeah, Rito, without a doubt. TNA or the TQQs. Okay. Here's part of the charts I wanted to show you, and this is last year's equity curve. Last year's, and as you see, the curve kind of, it goes up, it goes down. I was ahead of schedule all the way up through the end of February last year, and then February to well, March was it was not a huge challenging year, but you get these ebbs and flow. We got back on, back on schedule in July, then August, September doldrums took off, and then September through the rest of the year, we climbed with the rest of the market and did really, really well. But just keep that in mind that no one ever has a profit loss or an equity line that goes up in a straight line. That white one there is just my target. That's the 40% line for me. So with that, here is my current line. And as you can see, basically I'm slightly ahead of schedule. And where we're sitting at is up about 7% for the year and slightly behind the S&P as of about 9 o'clock this morning. The next question we have, though, is, and Anil's not with us, and so so I'm going to have to do a face-to-face with just me. So let's go ahead and kick over and start doing that. There we go. Do you know that complicated trading strategies can actually trigger more fear about making incorrect trading decisions? And today, I'm going to tackle that particular trading issue because there are approximately 10 different pain points that we traders have. One of them is huge, the fear of making an incorrect decision. And this is something that some traders believe some traders believe that a complicated system is better, or does complicated just feed their ego? Because I have known some traders who, I want it to be as complicated as possible because that's what I deserve. And it didn't have a doggone thing to do with trading. It's just that basically they were so full of themselves that they said the more complicated, the better. Even if they were designing a system, they didn't design it simple enough for other people to use. And that's one of the things with autopilot trading. I want to make sure that it's a clear and simple approach to swing trading success. And that's exactly what we've done. And so what are some of the things? How do you know you're overly complicated? I think a couple of steps you can take to determine that is, one, take a look at your charts. Take a look at your charts. How many indicators do you have on the charts? And what are the value? And ask yourself, what are the values that each of these indicators bring to my chart? Is it helping me make money? And then occasionally, I would say 2 or 3 times a year, strip all the indicators off your charts where it's just price action, where you're basically just reading the price action, the candlesticks. You may want to leave on like one moving average, like the 20-day or 21-day moving average or 50-day moving average, and go back and do some testing to see if you can see things more clearly, because now they're clear and more simple. That's a great way to make one simplification. Another simplification is reduce the number of stocks you're watching. In other words, let's say you're watching, so a lot of people think, well, you're watching 50 different stocks. Well, no, you don't. Basically, can I tell you a secret? I can tell you a secret right now. If you will go to IBD and pull down very simple chart, simple watch list, it's basically your leader board or the stocks closest to a buy point. And there's usually about 10 to 12 stocks in that on a weekly basis, and just focus on those. How much more simple did I just help you to become in your stock picking process? Hopefully a lot. And let's see, what else? Oh, the sophistication of simple. And I think it was Leonardo da Vinci who once said that never put down that he said that simplicity is the highest sophistication. And so I'll let you chew on that. And maybe we should all go out and get a tattoo that says sophistication, the sophistication of simple on our arm, or maybe on our forehead, so that when we want to start complicating our trading, we don't. We'll back away from that. So what's a good idea, Jim? Keep it simple, silly. So I got a question for you, though. Who's with me to go get that tattoo? Anybody? Okay. Excellent. Let's go ahead and jump back over into. Okay. We've gone towards basically reviewing some stocks, and we're going to do that right now. But I'm not reviewing them so much for whether or not they're a pick or not. Don't do tattoos. Me neither, man. And so, in a sea of complex trading options, we can narrow down our focus by just selecting a few stocks to simplify the strategy and ease the worry. And I need to show that. Yeah, here we go. Hold on a second. There we go. Okay. And so it helps ease our worry so that we're not making, I'll go back and repeat that basically, is in a sea of complex trading options, can narrowing our focus to a select few stocks simplify our strategy and ease the worry of making a wrong turn. Do you feel this is an accurate statement? Yes or no? Just is it? And how many stocks, just by number, how many stocks do you like to follow? And does it ever seem like it's too many? Just drop a note in there, the number, and yes or no on is it too many. So taking the stage this week, we're going to be taking a look at first AMD. There we go. And then after that, we're going to take a look at Tesla. And then after that, I'm going to surprise you because I'm going to talk about the biotechs, but I was shocked when I looked at the charts today and found something that was it blew me away. So let's start with AMD. AMD had earnings last week, and well, that's not what we want. AMD had earnings last week. Got a cord going across. There we go. Nope, we're not there yet. There we go. AMD. Look at that blow up on AMD. Now, with it taken off, it is in blue sky territory. How high is it going to go? That's one of the big questions you should always ask yourself. How high is it going to go before it potentially starts to turn, at least slow down? And the quickest way to do that, and I'm just going to step through the quickest, go to your fibs, go and track from the high on the weekly chart to the low of its last move. And then that's going to start triggering off some ideas of where it could go. 1272, that's the number one target whenever you get a breakout like that. And oftentimes that's where things slow down. However, if we break out the 1272, look for it to go all the way up to the 1618, which is up at 241.03 right now. So that's the upside target on AMD. AMD did a really nice job of crossing back to the upside. At the same time, do I see any kinks in its armor? And the answer to that question is yes, I do. And here are the kinks that I see right now. Is one, I've got a head and shoulders pattern forming on my momentum chart here. It can continue to go up, because it can go a lot higher even after momentum is shifted. But that may be an indication the momentum is you're going to be shifting in the offing. Secondly, I have, even though I've broken out with my week daily TSI, I'm still showing negative divergence as I broke into new highs. I would put an alert right there below the 1272 extension, put an alert at about, let's say 207. It's about $5 away, and see what AMD does when it gets back there. Also, on the flip side of that, watch for a pullback towards the breakout area. So I would say first put an alert at 193 and then another alert down at 186. That's when AMD would become interesting for me to want to buy. Moving around rapidly. Okay, Tesla. Those of you who watch my video over on the YouTube channel, Market Tech Talk, you know that I have done an expectation of Tesla moving all the way back up here to about the 200-day moving average again at the downtrending channel line. That's still my expectation. Price X's are still moving this way. What is one of the big problems you see with Tesla right now as you look at this price action? I'll give you about 5 seconds to put an answer on that. So, for one, yes, this is constructive. However, this is a very with all the other magnificent 7 stocks just off to the races, this is kind of wimpy. We are still below the 200. We are still below the 50-day moving average. So this may turn out to be just a rally back into resistance, and then we get a pullback and then a stronger move up. We'll see. We'll see. We don't know what's going to happen on it yet. I'm still projecting that, we could get up here to approximately the high. If, for whatever reason, it only gets up to the moving averages here on the weekly charts, which is here, that's an indication of weakness. And if it breaks back down on the downside, watch out for those lower projections down at the 152 and the 118 level for Tesla. Now, I said that I would take a look at the biotechs. I'm going to. I thought the biotechs were actually topping, and they are kind of. Mixed signals on the biotechs. We've got oversold market, TSI momentum looks like it's turning down. However, weekly momentum is going higher. We had a gap up, but I had a Harami shooting star, a bearish engulfing, and then today I'm getting an inside day. So, like I said, it's a mixed signal on the biotechs. And I think that the companies that are involved in this area, and this is XBI, I think the companies that are involved with this area are also getting mixed returns. So, but then the surprise for today is this. I've been talking about the seasonality of gold, and oh my gosh, it looks like it has kicked in. And now we've broken structure on gold back up to the upside and actually come really darn close to breaking out of this resistance area right there. At least it's stuck there. So this is telling me that gold perhaps has turned around. And so I'll be looking for some kind of a pullback back into the moving averages or back towards the downtrend line here to kiss the trend goodbye. When I do that, I want to be also looking at GDX, which is the gold miners. It also is starting to reverse and turn around and is making some very positive moves for a while. And note over here on the weekly chart, my TSI is just about ready to cross to the upside. And I had a 2-line cluster a couple of weeks ago on the market forecast, and that's looking very positive also. Throw on top of that our good old buddy Nugget. And Nugget is basically showing similar type situation. I'm not ready to buy it yet. However, we are getting a really nice breakup from a consolidation. So it's moved back up on my list for your information. So awesome on Nugget. Those are the stocks that I'm watching right now. So what else we got going on here? Oh, well, let's see. Hold on a second. We did that. We did that. We did that. So it's time for market trading tip. And our trading tip today, if you ever wonder why traders rave about TSI or RSI as a momentum tracker, how many use RSI? Well, you can't really just drop a T for TSI or drop an R for RSI if you're using those. Please just drop those down in the chat box. I'd appreciate it. So okay, let's take a real hard look at that. And what I've done here is I've actually laid in three different indicators here. The middle indicator is the out of the box TSI. And with the out of the box TSI, what you see is it clearly lags signal wise the RSI, which is down on the bottom. The RSI on the bottom is giving some indication here. We're up above that 70 line and dropping back 30 line at the bottom. And those tend to be good trigger points for larger moves. Hell, let's just leave Nugget up here. And we've got a positive move to the, a bullish move back up to the upside. So that's a good thing. The other thing that you can do with the TSI, with the RSI, is you can highlight and draw trend lines in. And once you get a broken structure, that gives you an idea that, aha, my structure has been broken. My momentum has shifted to the upside. I want to be a buyer now. So that's what's going on there. Now, as you see on the regular TSI, it lags a lot of and its signal is after the RSI. That's why so when I started using this about 10 years ago, I did some research on it. I modified the TSI to basically be the 883 exponential with my overbought at on the plus and minus 42, and using a 20-day moving average, exponential moving average on it. And notice how all of a sudden my triggers and for my crossovers came much more into line with the RSI. While it doesn't measure exactly the same thing, I found it absolutely phenomenal, and it's great for doing patterns. And I'm going to do one thing before I get into the rest of that. Hold on. I want to. There we go. I'm going to take the one that I modified off just so we can have a more direct comparison. And as you see on that comparison, just start doing some projections. Here was my signal on the RSI. Well, it almost lines up perfectly with the TSI. Here was my signal on the RSI. It lines up almost perfectly with the TSI. One of the things that might be a suggestion if you're looking for confirmation is to have both on your charts. And if you do add it to your chart, take something else off so you're not just adding to chart complexity. And here, what you have is when it bounced back up off of the 70 line, you had a double cross here on TSI. And it like I said, it gives you a really great idea on how to utilize the TSI. Well, not how to utilize. They complement each other very well. So if you've never thought of doing that, take a look at doing that on the TSI and RSI, and double check. The other reason why I'd use the TSI better than the RSI is because my TSI goes across any time time scale, weekly, monthly, daily, intraday, and I don't have to change the parameters. So it's simplified. Again, we're all about less complexity and more simplification, and that's exactly what we got with that. Okay. Hey, this is a good point, especially when we're trying to make it simple. It's the trader who can manage their emotions and stay disciplined that come out on top, per Mark Minervini. And so remember what I said earlier. I said basically, that I would cover another tool that would help you, simplify what you're doing. And for me, this tool is an absolute must, and to help untangle the trading complexity, and that's to have a journal. And that's my journal. I'll put a link down in the bio and on the first link comment about how to get the darn thing. But there's more, and I want to share it with you right here, is next Monday, my good friend Mike Lamothe and the ancient trader me, we're going to basically start a new podcast, and it's called Trading Truths Podcast. Mike and I are going to be working on dispelling the myths of trading and things that traders believe that impact both their mindset and their systems. And so I invite you to join. There'll be an ad going out about it. It's going to be, you can get on it on my YouTube channel. If you follow Mike, it's going to be live streamed to his YouTube session also. And it's Wednesday. Please mark it on your calendar. Wednesday. No, not Wednesday. Did I say Wednesday? What a dummy. It's not Wednesday. It's Monday. I'm going to have to change this poster. It's Monday, March 4th at 12 p.m. Not Pacific time, 12 p.m. Eastern time. Oh, gosh, I just caught that. Wow. Anyway, and remember, simplify your approach and watch your trading evolve, which is to, and answer a question for you. Which of today's trading tips and are just today's presentation spoke, the loudest to you? What kind of hits you? Was it the trading tips? Was it the stocks? Which hits you the most? I'll leave you a couple of seconds to put in a comment. So if you're interested in diving a little bit deeper into greater trading tips, check out these videos that will be popping up here shortly. And remember, hit the subscribe button, and please tell your friends and neighbors about Trade Your Way to Freedom Insights on Market Tech Top. A huge thanks again. I'll still continue to thank Anil, because I know he's taking care of a lot of family business over there in India. Be glad when he gets back so we can get back together. And so going forward, let's keep things straightforward and watch as your trading path unfolds. I appreciate everyone for tuning in. So I can't wait to see you next week. So as we like to say, aloha and God bless everybody.